Exactly. And fintech has been one of the biggest losers, really the worst performing groups of the year. But Wall Street's definitely keeping an eye out for some opportunity at these prices. There were some big winners in May. We had SoFi. That was the big outperformer for the month, followed by Robinhood and Affirm. You compare those names to ARK's fintech ETF. That was down about 9% at the same time. If you zoom out a little bit, though, year to date, those charts not looking as good, with the stocks down more than 50%. Affirm has the deepest losses there, worst performer of that group. But then Coinbase was one of the worst performers in May as crypto prices got crushed. Bitcoin is on pace for its worst month since December. Ether, meanwhile, heading for its worst month since March of 2020. JMP Securities is among those doing some value hunting. The firm ran some screens on more than 100 fintech companies looking at cash levels, growth, and short interest as well. First, cash relative to market cap. The top of that list is Root, and then you've got Robinhood backed as well. JMP calling this a good starting point for value. More cash tends to put these companies in a better position to weather a soft patch and then potentially go on offense with M&A as well. They also rank the most attractive valuations based on earnings growth. Calling out some names like Curo, that's a consumer finance company, NerdWallet, Upstart, LendingTree, and Rocket. Those are still expected to see double digits EBITDA growth, while shares are all deeply in the red year to date. And then finally, short interest. You've got Upstart, Lemonade, SoFi backed, all on the high end of that list. If sentiment changes, shorts have to quickly cover their positions, and that can often spark a rally. That may be part of the story with SoFi that I mentioned earlier. You can see that one's got about 15% short interest on that stock. Dee.
Okay, I want to go back to that idea of who has cash and who doesn't, because since we've been covering this industry for a long time, you've just seen so many companies go public over the last few years. Some might have thought that there'd be more consolidation right now with valuations coming down. You said the likes of Robinhood and Coinbase, they got cash. Investors kind of want them to do something.
Yeah, it's interesting. Coinbase has been on a little bit of an M&A spree in the last 6 months or so. They've been buying some of these smaller strategic startups, but Coinbase has a bunch of cash on its balance sheet. Robinhood, as far as the cash compared to its market cap, is among the highest, but they actually have to hold more cash because it's a brokerage firm. So there's questions over whether they can deploy that versus having to hold it because of regulatory reasons. So interesting to see. That is the expectation, though, going forward, that either private companies that are also getting hit that we didn't even touch on, but the same thing is happening in private markets. We likely will see more consolidation. It may just be too soon.
And while we have you, I do want to ask about this sort of mini rally that we've seen in crypto. Bitcoin above, actually, it's nearly at 32,000 this morning. So what's behind that?
So it's interesting. It happened. We talked on Friday a little bit about holiday weekends often being part of that. Liquidity is lower. We saw the rally. Bitcoin was up about 5% yesterday. So it may have been sparked with lower liquidity, fewer people trading on a holiday weekend. That you often see outsized move. But the same thing has happened in Bitcoin, that we've seen a lot more leverage. So often if you see a small move, that can sort of have traders often rush to cover their shorts. It may be a bit of a short squeeze. No obvious headlines, but that's often the case with Bitcoin.
Well, Kate, thank you for breaking it down for us.